Hi, this is Roger Conrad. I'm editor of Utility Forecaster. Thanks for tuning in. What I want to talk about today is the near-term trend in utility stocks. We obviously had a nice run up at the end of last year, and the beginning of this year, particularly beginning in early February, we've seen something of a sell-off. This is quite normal action for this group. As I pointed out in the newsletter, in fact, one very profitable trade involving utilities, and I'm usually not much of advising much of being a trader in utilities. I think you really make most of your money by simply buying and holding, watching those rising stream of dividends build, and watching your wealth build that way. But you can trade these things, and with a fair amount of accuracy, buying, say, the index or buying utilities at the beginning of the fourth quarter, selling them again at the beginning of the first quarter. And this is, again, the trade that's worked out. Again, for those of us that are long-term investors, of course, you do the opposite. You don't want to be buying a lot in the fourth quarter when prices are running up. But the first quarter affords quite a bit of opportunity. And that's the kind of thing I've been looking for as we enter the new year. We've added Sempra Energy as one of our recommendations. It replaced FPL Group, which of course has been suffering from the extreme adverse shift in Florida regulation. I think that will be a very good one over time. Sempra just announced that it will sell part of its commodity trading division, the part that's outside North America, and fetching a pretty good price. They'll continue with the North American operation and possibly purchase that. So this is a company with lots of assets backed by pipelines, backed by LNG facilities, backed by electricity and distribution, low carbon energy or electricity generation, with $12 billion of infrastructure projects planned over the next 5 years that will go into rate base, that will boost earnings and boost dividends over time. So I think a tremendous opportunity there. And again, a good time to pick these stocks up the early part of the year when they've dropped off. The last thing I want to talk about is something on a little more fundamental basis with the utilities, and that is the Obama budget. And I've written a little bit about this in the Utility and Income or Utility Forecaster Weekly that accompanies the issue and is mounted on this site. And that is two basic items, one being the extension or the making permanent of the preferential rate on dividends. The top rate on dividends will go up to 20% under the Obama budget, but it will be made permanent, and it'll only apply to those in the upper income bracket. So, it's kind of a question of, is the glass half empty or half full? I think this glass is about 3/4 empty. Obviously, 15% as a top rate is better, but 20% as a top rate made permanent, I think, is superior in that now we can start seeing dividends and the benefit of dividends really being priced in to these stocks. So that's a very, very positive development. Without this being in the budget, the preferential tax rates would have expired and the top rate would have gone to, 39.5%. So this is a very, very positive move, maybe a little bit overshadowed in the media by the size of the deficit that we're looking at and some of the other provisions some find objectionable, but very, very positive for investors here. Second thing is concerns spending priorities, and I think this is something I'll be writing about a lot more in Utility Forecaster, also in the March issue. This is the nuclear power industry and the fact that the Obama administration made this a very, very big priority and allocating basically around $55 billion in preferential loans to the industry to get some of these reactors built. We've already seen some of these loans awarded to reactors in Georgia, and those look like they're moving ahead. They'll be operated by Southern Company. They're also owned by municipalities nearby. Existing sites for nuclear plants tend to be very, very pro-building of new reactors. So this is where these plants are. They're on the Vogtle site in Georgia. The Georgia Regulatory Commission is also very, very pro long-term investment for Southern Company. That's one reason why Southern Company is one of the very best utilities out there, because their regulators work with them. They try to plan things long-term, and therefore you get better prices, lower interest costs, and certainly much more predictability, and therefore a lower cost of capital. And so therefore ratepayers wind up paying less, and the companies wind up making more money. So again, a very positive dynamic there. The Obama administration will be trying to get more nuclear plants going around the country. Energy Secretary Stephen Chu has obviously proven himself to be for this, and as well as proven his power in the administration, which is looking for ways to look to work with Republicans as well. So I think both of these are very, very positive things, and things that are going to make us a lot of money going forward. And again, in the first quarter of the year, prices are low. It's a seasonal phenomenon. Good time to pick up some of these companies. So that's all I have to say today. Please read the issue, and I'll look forward to chatting with you next time.